Hello, everyone. Welcome back to the RationalInvestor.com's Weekend Frivolity. Are we live on YouTube? You never know with this YouTube page. It looks like we got something going here, but I'm not quite sure. Live on YouTube? You never know hey, there it is. With this YouTube page, well, that's good. Yeah, fairly. It is the holiday weekend here, so I did notice that. Actually, I'm pretty impressed with the number of level oneers that made it to class today. Learning about candlestick patterns, fractals, engulfing patterns. Engulfing bars, haramis, bull rammies versus bear rammies. So, you level oneers, if you are watching, feel free to either pop into the lounge. We posted the hangout in the lounge, so you can be part of the conversation here. But also, too, if you're watching on YouTube, feel free to ask. And actually, I'm really pleased to see that the current level oneers are slowly having their minds blown week after week. Oh, that's how that works. Oh, my goodness, look at that. Oh, what an awesome trade location tool. So, yet again, another whack of aspiring traders are heading off to the races. We should probably, in fact, you know what I think I'm going to have to do here is I think we're going to have to do like a disclaimer sort of screenshot. I haven't put the screenshot together, but I think we're probably going to have to do that at the beginning of all of these videos. Please understand, everyone. First off, this is not investment advice. I think it is super important that if you are dealing with some sizable assets, that you actually invest a few $100 and sit down with a professional financial planner just to review what your plan looks like and whether you're taking appropriate risks. And of course, we do not give tax advice here at TRI. And any tax considerations, any implications about your current, your country and how the tax code should be handled. I think it's worth spending a couple $100 and sitting down with an accountant and making sure you have all your bases covered. Somebody actually had posted on the site just over the weekend to me that Australia is really cracking down hard on tax evasion with regard to crypto. So, we're not here to advise how to dodge taxes. And I would strongly suggest all of you to have your taxes paid. There's no sense in getting in fights with Big Brother. You can't win. You just can't. You could, if you'd like to, you can always relocate to certain countries that have favorable tax codes, and a number of TRIers have emigrated to the great nation of Puerto Rico. And hats off to you, but just you got to play by the rules, whatever country you're residing in. You got to don't fight the man. You can't win. So first off, this is not financial advice. I would strongly suggest that you can, if you're dealing with sizable assets, you pay a couple bucks. This is sort of like penny wise, pound foolish. Spend a couple $100 and have a session with a financial planner just to review your total plan. And make sure you're on a good course. And then secondly, we do not give tax advice here. And I would strongly suggest that you consult your local accountant to help you with regard to being on side with your local tax code. Yeah, and actually, it's interesting. Good feedback, Benjamin. I've actually had a couple people say that we might even include a disclaimer on joining the site. You have to understand that I didn't build this site to tell you what to do in the marketplace. That is critical. I am just one market participant. If you'd like to follow along with the trades that I'm doing, great. But you have to understand that these trades are within my plan. They're all about Brian. and they may be completely inappropriate for you. And half of the reason why we built the school is we do not want robots at TRI. I don't want robots on even on the YouTube page. We're here to educate you on how professionals act in the marketplace, working with trading plans, vetting setups, understanding risk management, and then ultimately helping you build your plan that properly reflects you and where you want to go and how you want to approach managing your capital. I do understand that there is quite a bit of angst over altcoin season right now. And when is altcoin season going to come? I hate to tell you, folks, it just may not come. That is capitalism. And one thing that bothers me, and I don't think people clearly understand this, but when I was a retail broker, I and through this school program, I've identified the different type of risk takers that I had in my when I was a broker in my client base. And if you are a little old lady, if you fall into that category, then you're not really in a hurry. You have to understand, I think this is critical, that every single investment advice ever given out of any brokerage house, they always say you must have a 3 to 5 year time horizon. That's like doctrine. And if you don't understand that simple concept, then you're not a little old lady. You are a speculator, and you are a gambler. Little old ladies, the whole purpose behind that was, Brian, I've got some money I'd like to put to work. I had, some interesting ideas. And I want to take very small little bets on a whole bunch of different names. The basic rule of little old lady is don't take more than 5% risk on the stake or what it is that you're working with in that particular asset class, and risk it on any one particular name. And so, let's say little old lady, she owns her house, she has a pension, she's got maybe $50,000, $100,000 in the market. She's going to take a portion of that, throw it at crypto. And if you do that, then she basically buys into 20 different names. Also critical too, that, and through the whole Bitcoin peak and then this sell-off, through our school program, we tell students go slowly. Just because the 5% rule is the 5% rule, that doesn't mean you have to put all 5% into the trade at once. Maybe you do like little nibbles once every month, once every couple months, once every few months of like 1%, but you're not allowed to break that 5% rule. Ooh, I like that. Benjamin's given me the official disclaimer. Here it goes. Ready? TRI is not an investment company, investment advisors, or broker-dealer. Does not provide investment advice. The information provided on this website does not constitute investment advice, financial advice, trading advice, or any other sort of advice, and you should not treat any of the website's content as such. TRI does not recommend that any cryptocurrency should be bought, sold, or held by you, and nothing on the website should be taken as an offer to buy, sell, or hold cryptocurrencies. This information is for educational purposes, so please conduct your own due diligence and consult your financial advisor before making any investment decisions. The information expressed on this website is our opinion and should never be used without first assessing your own personal and financial situation or without consulting a financial professional. That's beautiful, Benjamin. Thank you. And actually, I did a little pause there so that I'm actually going to go and take that little bite. I'll edit this video later on, and I think I will take that sound bite and actually plunk it right at the beginning of the videos. That's great stuff. Thank you, Benjamin. So, the bottom line here is that we are speculators. And I think everybody here and everybody in crypto must understand that this is about the absolute most speculative asset you can possibly participate in the market. You can get wrapped up in the, fiat currency system is dead and cryptocurrencies are the future. I mean, if that's how you feel, great. But you have to understand, ironically enough, I actually used to, when I first came into this space, I used to compare cryptocurrency trading and all these unregulated exchanges and the way they can just disappear instantly with this is even more risky than trading on the bulletin boards down in the States or the pink sheets. At least at the end of the day, you know that the bulletin board's going to be back tomorrow. A lot of these crypto exchanges, you don't even know if they're even going to be back tomorrow. So please understand that, anybody who's participating in the cryptocurrency space, this is the most possibly speculative environment you could possibly participate in. I think also too, it's not a bad idea that we just show you what, this is what we teach in our level 1 program when it comes to risk management and like financial planning. I like, there's an old rule in the marketplace. And again, this is for your information. If you do decide to put some serious money to work in the market, I think it's worth the money to go and just consult with a financial advisor, somebody's licensed wherever you live, and just simply run this by them and say, okay, does this make sense? And if they're like, whoa, that doesn't make sense for you at all, then take a pause. But in essence, this image here is how I would sit down with any, I used to be a financial planner and I was licensed in Canada, jumped through all the bureaucratic hoops, yada, yada, yada. And ironically enough, there's an old saying, an old adage in the market that, and everybody should follow this, where you take your age and you subtract that from 100. And whatever number that is, that ultimately should be sort of your maximum risk exposure on any one single idea when it comes to risk. Actually, maybe I should back that up. That age minus 100, that number is your maximum risk. Now, as this image illustrates, in the marketplace, there are different types of assets. And of course, all the crypto people are like, hey, government bonds, you're kidding me. That's terrible. That's horribly risky. But in the financial planning world, in essence, we split risk assets and non-risk assets into two types. Keep in mind that theoretically, a bond is a guaranteed investment. So theoretically, you should get your principal back at maturity. So that's why it's considered less risky. Now, there is always the case that companies or governments default on their debt. It happens. And we even say in the course and in our classes and on our site, you can never mitigate risk. You can't get rid of it. You can take steps to minimize risk, but you can never mitigate risk completely. So the point of the matter here is that any financial planner that sits down with you is going to say, okay, well, what's your net worth, right? And, how much money are you working with? All right, now, do you own a home? Do you have equity in cars, cottages, boats, a vacation homes, cottages, like I said? Do you have pensions? Do you have life insurance policies? All of these are basically assets. And then, of course, what kind of liabilities do you have? And frankly speaking, I actually think it's a good idea to pay off all your debt, be completely debt-free. That's just me. Like there's an old adage in the marketplace that says, I think it's an old Hebrew saying, neither a lender nor a debtor be. And I'll tell you, probably, I guess maybe about 10 years ago or so, I completely left the debt world. And I live a very, very comfortable life in that I don't have any debt whatsoever, no credit card debt, no mortgages, no car loans. I do not, everything in my life is cash basis. If I have cash in the bank, I can go spend it. If I don't, then tough shit. And frankly speaking, I think everybody in this world should live that. If you do live that life, then all of this nonsense about the banking industry screwing you over and all that kind of stuff, it disappears. I do understand that everybody has to have a home to live in. And, if real estate prices are attractive, you can justify mortgages. But, I like longer dated mortgages, like, 20-year paper if you can get that. So then that way you just know it's locked in and you're not susceptible to the whole interest rate cycle. But the point of this image is, and everybody should understand this from day one, that if you're dealing with any sort of size of assets, you need to break them apart right across the risk spectrum. And we can go, least risky. Technically, cash is the least risky. By default, you should have 3 months of living expenses in cash just sitting there, just in case the system breaks and you gotta just survive. And then, of course, for traders, if you're not actually in a position, then actually cash is where you should be. You should just sit there waiting for your next setup to develop. Then as we sort of move along the risk spectrum, your next sort of category is government debt. And theoretically, if governments default on their debt, then we got bigger problems at hand. And as you can see from the United States of America, and even Alan Greenspan himself said this, is that the United States of America won the Cold War. They are the de facto sort of hegemony kind of fiat currency system masters, if you will, right now. And if they get too much debt, they can just simply print paper currency to pay off the debt. And of course, that dilutes their currency and injects a whole bunch of price inflation into our lives. And we've all seen that happen since the days of quantitative easing. That's exactly what happened. The United States got too much into debt. They carried too much debt on their books, and they just printed a whole bunch of money to relocate that debt back onto the government's books. As we move down the corporate, the ladder of risk, the next debt category is like corporate debt. And then there's a whole bunch of grades of debt there, from very high quality, very low risk of default, all the way to junk. There's also a category in the debt category called convertible paper, where you can buy convertible debentures, index-linked notes, those kind of things, where they actually do have a little bit of equity component, but they're a bit more risky. And in essence, these are what we call guaranteed investments, and they're a little bit less risky. As we sort of move along the risk spectrum, things like real estate as an investment is sort of, we're now starting to get into a little bit more risky. Remember, everybody has to have a place to live and a home, so we don't really consider your principal residence in this equation. Because, like if, for example, in Canada, your principal residence carries a very different tax structure than real estate for investment purposes. So I'm talking about real estate for investment purposes, things like REITs and stuff like that. Then as we move along, we get into equities, or what we call stocks. And of course, there's a whole spectrum there. You can invest in big blue chips, all the way down to, remember I made reference earlier to things like bulletin board issues. But we have to understand that there's no guarantees with equities investments. There is no principal, and your stock could go to zero, a la Enron. WorldCom, we were joking about WorldCom in class there the other day. Even blue chip stocks like Eastman Kodak used to be in the Dow Jones Industrial Average. Now you can't give it away. It's only $1 or $2 a share. So the point here is that equities, we're heading along the risk spectrum. Now we're starting to get into pretty risky stuff. And then finally, the most risky category is commodities. In our education program, we try to teach our students, how do you actually value a commodity? And I would argue that cryptocurrencies are a commodity. They're certainly not equity. You don't participate in any ownership of the actual story. You don't have any voting rights. And there's no such thing as dividends. Some cryptocurrencies tried to do the dividend route, and they got really bitch slapped there a few years ago. There's certainly not fixed income. There is no interest payments. Again, some cryptos tried to go that route, and they got bitch slapped. And of course, with regard to cryptocurrencies, there's absolutely no guarantee of principal whatsoever. So if we think about cryptocurrencies in this category, commodities, what are other commodities that are sort of typical, sort of similar? Think of things like gold, right? Think of things like oil, soybeans, right? That's sort of the area that we're going down when we think about commodities. And where does cryptocurrency fall in all of this? And the number one sort of value metric here is, what is the cost of production? So if it's the gold business, obviously prices can go up and down, but where's a floor? Well, usually the floor in prices is at the sort of level where there's an inherent demand for gold, whether it be in like electronics or, we used to have the Indian wedding season. There was a lot of demand for gold out of that. And in essence, what is the absolute bare minimum price to supply that basic demand to the market? Things like Barrick and things like Placer and stuff like that. How much does it actually cost them to produce an ounce of gold? And it's quite interesting when we go through all this sort of, you're using gold as an example. It's really interesting when you go through and actually look at what the cost of production for an ounce of gold is these days. And it's about like $800 or $900. So you can do that same metric with soybeans. You can do that same metric with a barrel of oil. That is your base. And so when it comes to cryptocurrencies, I often ask people, okay, what is value? And this is all about, we're supposed to be rational investors here. And that means that we theoretically take both fundamental criteria, and when we're thinking about commodities, we're thinking about the cost of production. What is it actually, what's the minimum price needed to keep these networks going? So for Bitcoin, for example, we had on our charts for quite a while this study, and one of our site members actually came up with it, and I put it right at the bottom here. So, as of this date, and I can't remember what date, we actually should have put the date on here, shouldn't I? That was kind of silly. But back when we were sitting down here, like $3,000, where's the bottom? Where's the bottom, right? And people are actually doing math. Where is the cost to actually produce a Bitcoin? And this one particular person, which I thought was a really cool study, came up with about $2,600. Is that yours, Tony? Is that you? I thought that was a real, and I just like to keep it as a frame of reference. So here we are, a bit like what, $11,000 a Bitcoin. You should be able to look at this and just simply say, are we trading at the cost of production? The answer clearly is no. Are we trading at a premium to the cost of production? Yes, quite substantially. Is maybe a little bit of price, maybe a little bit vulnerable up here, since we know that the cost of production is down in this area? Yes, it's just that simple. So when we're thinking about investing in commodities, this is, rational analysis. This is where we really have to put our nose to the grindstone and figure out, from a fundamental perspective, what is value? And the problem that I have here is that I don't think that the crypto space has actually been alive long enough for us to actually come up with good fundamental value metrics. I like that cost of production study on Bitcoin, but the problem is this is a POW coin. What happens if you have a POS coin? Something like Ethereum, where, and if I think they're proof of work, but they're moving to proof of stake. But how does proof of stake sort of fit into this sort of what is the cost of the network? And frankly speaking, I don't know whether there is any specific number to actually keep those POS networks going. I honestly don't know. And I don't think anybody has come up with a solid answer of what is value here. So, we have to understand in this context, if you're playing in the cryptocurrency space, we fall under the commodities category here without a shadow of a doubt in my mind, which means that this is the most risky part of the entire spectrum you can be playing in. And then on top of that, we have just an insane amount of systemic risk. like I said earlier, I mean, maybe you're playing in the bulletin board, but at least when you wake up in the morning, maybe your brokerage house goes under, but you know the bulletin board exchange is going to be there. And what we're seeing here in crypto is some of these exchanges just poof, gone the next day, like Cryptopia, right? Or Crapsy. Anybody on YouTube remember Crapsy? I don't know how long you guys have been in this space, if you even remember Crapsy. So with this said, if somebody had come to me and said, Brian, I got $100,000, that's my entire net worth, what you should be able to look at this and go, okay, and let's say, I don't know, they're 50 years old. That's a nice simple number. You should say right off the bat, well, the maximum you can throw at risk assets, this whole category, is half of your portfolio. So, and then within that breakdown, it's never a good idea to go put all your money into one particular asset or one particular strategy. If you were, little old lady kind of idea, maybe you take a portion of that 50,000, maybe like 10,000, 20% of that. And the rule, Brian's 2 rules of investing, number 1, try and come up with an algorithm that's 2/3 accurate. And then number 2, and it's important that you get the phraseology of this rule correct. The rule says, do not risk more than 5% of your stake or what it is that you're working with on any one particular idea. And I would argue that each of these would be a portion of that entire financial plan. So maybe you throw like 10,000 or maybe 20,000, which is a bit aggressive, but maybe you throw that at cryptocurrencies. And you have to follow the 5% rule. So if it's like 20 grand, you're putting $1,000 into any one particular name. That's the absolute maximum that you can risk on that particular idea. And the little old lady would just let that money work. And you have to understand that every single investment advisory service right across the top of all of their research and their reports, you must have a 3 to 5 year time horizon. And to give you a historical example, I thought, I was sitting there thinking about this yesterday because it was such a good example. But I don't know how many of you in the public were actually in crypto back in 2013. But I remember distinctly this run up here. And the irony of it all is that right at $1,100, Goldman Sachs recommended buying Bitcoin at $1,100. Now, how did that recommendation do? From $1,100 all the way down, we had a low here of 150, or basically about an 80-90% haircut. All right. Now, how could they get away with this? Well, in the fine print of their recommendation, it said you must have a 3 to 5 year time horizon. And with that one little line, they're off the hook. No big deal. If anybody held them to task, they go, that was a horrible recommendation. But the irony of it all is if we look 3 to 5 years down the road, right? Let's take 3 years. How did you do? Even if you bought at $1,000, well, I think you did pretty well. So we have to understand that, this is sort of what we mean by little old lady. Is maybe we're going to go and nibble. Now, us at TRI, we try to encourage people to not even consider buying until we've hit our good old reload zones. And if you've started buying Bitcoin anywhere down here, little old lady, 3 to 5 year time horizon, you did very, very well. It's not even an issue. But the issue right now, what I'm seeing in the market is there are a lot of cryptocurrencies that are just bobbing and weaving right down here. And I'm hearing a lot of people going, well, I followed the little old lady program and I'm not rich. What's going on? But you have to understand, and I don't think we're getting the message clearly out to people. The whole point of me calling it little old lady is that the little old lady does not have a time horizon. She just wants to have her money working. And of course, she's extremely spread out. She's got like 20 different names, that she's done some fundamental research and she believes in the story, or maybe her advisor has done some research. And if you are all working on your own, then that means that you have to be good fundamental analysts. I see Dav's over there on the YouTube page. If you had listened to Dav and picked up a little bit of that grin when it W'd, that was pretty damn good trade. I mean, there are, knowledgeable people in this space that can give you good fundamental ideas. But I'm not going to be sitting here going, okay, that is good fundamental, that's shitty. I mean, remember, Brian's a trader dude, charts, trading plans, setups, all that kind of stuff. Ironically enough, you guys are actually the fundamental experts in this space, and I often default to you guys to give me fundamental ideas to chew on that you think actually have a half decent product. Xenox, I don't know that I'm pronouncing your name, says, so she will make doubles on delisted coins. How much FA have you done on your 200 plus coins? Well, I'll be honest with you. I started off basically just nibbling on a whole bunch of different stuff. And one of the first coins that I bought actually was like a total scam coin the previous cycle. So I think if anything, us coming into the space through here was a bit fortunate. We were ahead of the cycle. And also, too, I believe in these 17.5-year fear greed cycles. And this was almost like the absolute perfect storm. It was perfect timing to get into crypto. I don't know whether we're done this yet, right, for the little ones. If we look at, and actually I think I tweeted out today this study, we'll know that this is done when we start actually seeing W's. But I would argue that the crypto bear, especially like things like Schult coins, if you will, I think we're still very much in the shitter. In fact, our Schult coin index just continues to forge to new lows. What I am encouraged about here of late is it seems the mid-tier names and the fundamentally acceptable names, they're trying to base here, and this is even relative to Bitcoin price. If we did this versus US dollars, we might actually find that these bigger mid-tier names and even our fundamental names are actually just going sideways right now. And the mid-tier names, I'm kind of feeling like we're in this kind of phase for them right now. And I think I even put out a tweet earlier this morning that I think really this image summarizes the space very nicely. As I had sort of said to you just a few minutes ago, Xenox Bird, I think that we have a lot of systemic risk that is very, well, to put a lack of a better term, it's challenging. And frankly speaking, this delisting, and you may buy into names that have questionable fundamentals, and you might find that the blockchains are a joke. They don't support them, and the idea dies. Completely understandable. This is venture capital. I'd just be curious, Xenox Bird, do you know what the percentage of failure within the venture capital space is, even in the stock market? Do you know what well, maybe we should turn that around. What is the actual survival rate of venture capital names? Any idea? Dav, you're not supposed to answer this. I want him to answer me this because he needs to learn this. Like even within the stock market itself, how many venture capital ideas die? Xenox Bird, if you are participating in the venture capital space, you're not answering the question. You have to understand that a lot of venture capital names do not make it. Maybe could be 80+%, maybe even 90%. You have to understand that. That is the brutal reality of investing in venture capital. No ifs, ands, or buts about it. It sucks. I'm not going to sugarcoat it. And then on the flip side, right, when we're in a bull market, the returns are absolutely insane. That's just brutal reality. Get used to it. And if you can't handle that about the venture capital space, then I'm sorry, sir, you probably aren't suited for this kind of environment. So please understand, yes, like Trex, for example, we've got an account on Trex. They've killed probably about 10% of the coins that we have on there so far. And that's, to me, actually, that's pretty normal. It's acceptable. It is part of this landscape of investing in venture capital. And I wouldn't be surprised if the pain actually has to go on longer here. Because the problem here is that what I'm worried about in this space is that I don't think I've conveyed this fear greed cycle as clearly as it really needs to be. Like, you really need to understand that the market may lose interest in this space and it might just go dormant for quite a while. That is totally understandable. I want to show you an image, and I don't want to freak you guys out, but you need to understand this. I was a VSE broker for many years, and ironically enough, I actually left the brokerage business at the last cycle. So here is the Canadian TSX Venture Composite. This is the venture exchange for Canada. It is all the, nickel and penny stocks and all that. And through the 2007, 2008 peak, this is basically heading into that Chinese Olympics. The Chinese were building out their economy, and everybody was raw commodities, copper, gold stocks, oil stocks. Everything was raw. Then 2008 financial crisis come, and you can see that the Canadian Venture Index is still basically on its knees. It has not come back. And this is like a period of over 10 years. Could the altcoin space have to go through this kind of consolidation? Totally possible. No guarantees on management here whatsoever. I think you could make the argument that the broader sort of Schult coins, that was this image, I wouldn't be surprised if this has to go through a lot more pain. It sucks. It's brutal, but it's, very simply put, lower highs and lower lows defines a bear market. Until we actually start Wing out, we just got to, cool your jets. But, Joshua there is on the YouTube page. And Joshua, I thought, did a really good job. He actually created, I'm going to buy into this TRI rational analysis idea, and I'm going to concentrate on what I would consider good fundamental names within the space. And, we at TRI are constantly going through all the various different crypto sort of, quantitative analysis screening pages that give scores to different coins. And we would ideally like to have 3 or 4 stars for a coin on these quant sites. And you can go on these sites, right? Let's see if I can show you. And actually, we got Stuart on the call here. Stuart, this is this whole first half hour is speaking specifically to your request to talk about little old lady and portfolio management, and what should people be sort of doing here appropriately. And we started off the broadcast with we are not financial advisors, please consult your financial advisor, and all that kind of fun stuff. I don't know whether you can hear me, Stuart, but he just joined the site and he asked me specifically to talk a little bit about this. So, and now I'm getting beeps. Beep. Okay, so you can at any given point in time, this happens to be our library, so all the resources are nice and well laid out here, but you can come into sites like, where are we here? Here we go. Coin, well, there's a bunch of them. I think this Coin Checkup one's pretty popular. And, give me a coin. Let's take Ubiq, for example. See how they're doing these days. And you can see they give this thing a rating of 3.2 out of 5 stars. Not bad. So the point of the matter here is that one of our site members, and I thought it was really cool, he was like, okay, well, I'm going to do sort of a list of sort of fundamentally acceptable names. And so this is Joshua's FA list. But you can see it's still pretty weak, right? Really, I can't make the argument that we're going to go back into a rip-roaring crypto bull until this starts actually Wing out and making higher highs and higher lows. I think I also tweeted out, where the heck is it? Really cool study. Where is it? So many pictures. Yeah, I got it around here somewhere. Should probably prepare ahead of time, eh? You're in here somewhere. There it is. I think that until this kind of study starts Wing out and higher highs and higher lows, we just got to put the altcoin sort of, gonna buy my Lambos kind of idea, just blindly buying the altcoin market. You're guaranteed to make money kind of stuff on hold. And you can see this thing was trying to W out here. And if I'm not mistaken, I think we've actually made new lows here, right? New chart layout. That's not what I wanted, but we can do this. I got it in here somewhere. Low chart? Maybe that's how I have to do it. What the heck did we call this? Fudge. Might have been this one. Let's see what we got here. Yeah, there it is. So you can see we just made a new low. So there's no hurry here whatsoever. Isn't that interesting? Chat disconnected. So YouTube, the chat blew up, eh? Wouldn't surprise me after a while. People were like, oh, enough of this negativity, right? Anyway, I don't know. Can anybody post something in there? Oh, there you go. Okay. What about Chainlink, or is it just a pump and dump? All right. So that takes me to the next conversation. The first conversation that I wanted to have with you is what's sort of the overall state of the altcoin market. And frankly speaking, if you were like buying indexes into the altcoins and stuff right now, this is all relative to Bitcoin. I want to do up one of these studies where these are relative to US dollars. It might be an interesting, a different picture here. But the long and short of it is relative to Bitcoin, there's just no bottom here. It's not here yet. I did find it interesting that when this event happened here, this was the first, no, I beg your pardon, it was the second U.S. Marshals Office's auctioning of Bitcoins. That was basically this event right here. It was interesting that on that event, the whole altcoin market also started moving up. which was really interesting. It basically marked the bottom in the cycle. So we haven't seen that yet. This is what I need to start seeing. Maybe if we're lucky, we start Wing out here and working our way higher. What I want to see is, number one, I want to see W's, higher highs and higher lows. And I also want to see trend line breaks, basically suggesting that the pressure is to the upside. You notice we get W, trend line break, W, trend line break, W, trend line break, W, trend line break, et cetera, et cetera, et cetera. So I won't believe that the altcoin market is back into bull until this thing breaks, this trend line here breaks. And we're nowhere near that now. So on balance, overall picture, is the altcoin market in a bull market? No. Had you taken appropriate risks? Yes. A small portion of your overall portfolio would be underwater. Had you little old lady this portion of money that you had in the altcoin market, you did your fundamental research, you liked certain names, they agreed with you, you liked the story, you liked the prospects, you liked who was driving the bus, popular analysts gave you their sort of thumbs up that these ideas were going to work. All right, you have just simply have your money working. It's just that simple, right? And little old lady's out, playing canasta, working in the garden, whatever. She's got her money working in the market, and she understands. And I don't want to sound like a broken record, but this was Goldman Sachs. They actually got people to buy the top of the market here, which was brutal. But the long and short of it here, 3 to 5 year time horizon, you did perfectly fine. My hunch is, it's weird in this altcoin space. I mean, they're just throwing the baby out with the bathwater. I thought it was interesting. What am I popping over here? Dash, for example. I think Dash will do perfectly fine over time. That's just my opinion. Maybe it won't. Maybe it will. But if you look at something like Dash and you valued it in Bitcoins, you'd be like, oh, this is a train wreck, man. It's going out of business. It's all over. But I don't have a problem if a little old lady said, well, Brian, where's your reload zones? All right, up here and all the way down to here. Where's the bottom on this crazy thing? Right. And so as of this point, you are starting to work an accumulation strategy. And you're just nibbling, and even doing more nibbling along here. You're not allowed to break 5% rule, maybe 1%, 1%, and you just have your money working. I don't have a problem. I fully expect Amanda. She's going to get paid again, but it's just not Dash's time. It's just that simple. It's just not their market. And this is really going to test whether you're actually a little old lady or not. Little old lady's like, okay, fine. I got my money working. It's spread out. I averaged my way in. I haven't broken the 5% rule, and I'm just going to let my money work in Dash. And I believe in Amanda, and I like the story. I like who's driving the bus, and I'm just picking Dash out of the blue. We could do the same thing on Ubiq or any of these other coins. The point here is that little old ladies just, maybe. Well, not maybe. They're underwater relative to Bitcoin, and you just have your money working. It's just that simple. Now, full disclosure, and of course, you can come on the site and you can see the transactions I've done. I haven't committed any new capital whatsoever to the Bitcoin space or the cryptocurrency space since the top of the market in 2017. Not a penny. I have recycled some of the Bitcoin that we accumulated when things were doubling and been nibbling, 0.025 BTC, that kind of stuff. I have been nibbling away, but I have not put a single new penny into the market. You need to all understand that. In fact, on the Twitter feed, I specifically, back when I started this project, I said that I was going to take $500 and turn it into $100,000. And when I started that back in 2015, everybody would joke, "Ah, you're crazy. Ah, that was silly, Brian." So once I actually achieved this objective, at that point, I took 100 grand and we got maybe about 150 or so sitting in cash and gold and all that kind of stuff sitting on the sidelines. And really, the rest of it, I don't care. I mean, I know you don't want to hear that, but my feeling is, those assets, they're all free assets to me. There's, I think the account right now on Trex is sitting at about 50 grand or something like that. It might fall in half from here. It might easily fall in half. It might easily have another 50, 60% haircut. Wouldn't surprise me one bit. But you have to remember, guys, from my perspective, that's risk-free capital. I took my $500, in fact, took $150,000 out. I did what I said I was going to do, and the rest of the money is free as far as I'm concerned. And I'm not really in any hurry to sell any of them. I'm just going to let it work. Just let the money. I'm a little old lady. I'm just going to let the capital work. We might find that Trex shits on like 70% of these names. That could easily happen. I'm not saying it's going to happen. I'm not saying it's not going to happen. But from my perspective, there's no risk in owning these coins. The whole purpose of the plan was I wanted to accumulate as many coins as I possibly could. Has the value over the past year or so dropped? You bet it has. But I don't care. It's not really that big of a risk to me. Ironically enough, the biggest risk to a guy like me is systemic risk. Does Trex itself blow up? That's probably the biggest risk that I have right now, is not really these individual coins. Some die, some do great. Is do these exchanges themselves blow up? Everybody's absolutely in love with Binance right now. Could Binance blow up? Sure. Lots of these exchanges blow up over the years. And in a weird sort of way, because of this exchange risk, this space is even more risky than even like bulletin board investing. Because you know that the bulletin boards, it's probably going to stick around. It'll just be a broker that blows up. All right, so I wanted to have that conversation. That was probably a good 45 minutes or so. So, Sjord, if we want to, we could go and edit that, make it sort of a special message to the community. But you need to understand, everybody, that number one, altcoins are the most insanely speculative asset you can possibly be in. You would be no offense, please don't be insulted, but if you took all 100% of your net worth and you built a portfolio of altcoins, figuring that you were blue chip investing, that's just not it. You're not. You're fooling yourself. I'm sorry. Well, and then Seba here says something that I've been waiting forever, and Dav's on the call. He should be working on getting his goddamn software up and running. But I totally agree with you, Seba. If we could get to the point where Pandora's wallet, and I've been the biggest fucking fan of that damn Pandora's wallet forever. I've been waiting for it. Please, please. We could basically remove this exchange risk. Totally. I could totally do this. I want to see your face. The voice is different. All right. Well, maybe I'm still working over my hangover. Adam and his crazy mezcal. Yeah. Yeah, that's right. I had to, somebody in the lounge here says that they look at my Twitter feed. Yeah, I don't even know if you guys even remember this. But people actually used to, about a year or two ago, they used to like impersonate other people, saying that they were giving away Ethereum and stuff like that. So I actually had to put on the description, not giving away ETH. And I was so flustered when somebody did this. And somebody goes, actually, Brian, that's kind of a compliment, because they're not going to do that to you if you have no followers. So I thought that was kind of funny. But yeah, so Dev, if you want to come on and give us an update on how that how that Pandora's Wallet project is going. We'd love to know what's the status of that. Yeah, it worked, but we have a few issues to work out. I need Pandora's Wallet more than you. I bet, eh? All right. So I've said my piece about crypto. Highly speculative, the most possible speculative asset you could participate in. If you do not have a financial plan and where crypto fits within your broader financial plan, then you better, maybe spend a couple $100 and sit down with a financial planner and just hash all this out. How much money is appropriate to throw at something like a highly speculative asset like crypto? If you are a little old lady, then that means that you've put less than 5% of whatever stake it is that you have working in this particular sector into any name. If you are a rational investor, you've done your fundamental research and you believe in the story, and you have followed simple TA, trade location, you're not going to be buying above reload zones, and you're just slowly accumulating stories that you like, and you are just not going to break that 5% rule. And you're off. I mean, it's the middle of the summer. Hopefully you're off enjoying the nice weather, going to the beach, working in the garden, playing canasta. The point here is your money's working for you in the market. Now, if you fancy yourself a trader, then that doesn't mean you're a little old lady. They're apples and oranges. Yeah, if the asset doubles in value, then the little old lady, by definition, is going to sell half to establish a free position. Great. But don't kid yourself. The little old lady is not a trader. If you are a trader, then that means you have to be trading setups. And you have to be following strict risk management rules. We have various different types of traders. Joe Sixpack, margin trader, derivatives trader. They're all different risk takers, and they all have different risk rules. But the number one sort of underlying common theme about all of them is they're trading setups. And if the setup itself fails, they walk away from the trade. So I want to be very clear here that the little old lady is called the little old lady because she is not a trader. She is an investor, and she's slowly buying into ideas that she likes fundamentally and that are acceptable trade location, and she's just letting her money work. And you have to tattoo on your forehead 3 to 5 year time horizon. And it's very possible that a bunch of those names that she puts money in, they get, in crypto's case, delisted. Right? In stock market case, they go off the board. And as I said to you before, even in the stock market, venture capital, you have to understand that something like 80+% of all small businesses fail. Yeah, like 80+%. Okay, I've said my piece. We can revisit this. Anybody on the site who watches this and still has questions, feel free to PM me. I understand if you're underwater, you're like, when am I going to make money? When am I going to make money? Well, you just might have to just sit and wait. And it's just as simple as that. You're letting your money work for you. I think, especially in crypto, last thing I'll say here, and this sort of speaks to Dav, is this idea that give yourself some outs. If you don't want to go the cold storage route, your own wallet with your own keys, then at least consider buying names that are listed across multiple exchanges so you can always move the coins from one exchange to another. But at some point, if we're really, really, really lucky, Dav comes out with his Pandora's Wallet, and we can all just keep our coins completely off these exchanges. And if the exchange blows up, so what? But this space is still evolving. So, if you want to just go the exchange route, then my simple suggestion to you is don't buy into names that aren't listed on multiple exchanges. Right. So one of our members in the lounge here is saying decentralized order books works too. Decentralized exchanges have issues unto themselves. You have to remember secret passwords and stuff on those. So there are risks that are inherent there. And of course, the liquidity on those decentralized exchanges, I think, is kind of iffy right now. I think that with Big Brother really coming down hard on these centralized exchanges, it's given a bit of a push to the space to evolve this decentralized exchange concept. But I still think it's very much an evolving idea. There's barely any liquidity. That's right. Okay, so I think we've said enough on all that. A couple people asked me to review a couple ideas at the very beginning because they were asking me, Brian, could you take a look at this? So I think what I'll do is I'll just do a quick overview of Bitcoin and Ethereum and Litecoin and stuff like that, maybe 10, 15 minutes. And then we'll pop into your specific requests. So I was tweeting out, and we'll put the financial planning stuff aside for now. I was tweeting out through the week. Didn't know whether we were going to have a absolute classic 50% retracement tag, and then it stalls right at the 50% level. On balance for our education courses, we actually teach students that the absolute best tool that you can use for target location is that 50% rule. And if you bought the W down in here and you use the 50% rule as a target tag, yeah, you got filled here at the beginning of this week. You missed the nutso insano rally up into mountain man levels. But here we are just sitting basically right at 50% rule. So it's a nice sort of keep you honest level. And frankly speaking, I think it's the best tool that you can use to take profits. It's not being too aggressive. You're not looking for new highs. But as you can see, if you had bought this W down here, 4,200 and change, you got like more than 2.5 times on your money. That's not bad at all. Interestingly enough, if you bought the W and you sort of little old lady this with the rule sell half on a double, little old ladies got filled on their sell halves on doubles right at this level. So the bottom line here is that this is the end result of these bullish setups that fired down here through the late winter. I think, through the week when I started seeing people talking so aggressively about Bitcoin going to the moon and all that kind of stuff, that started to really worry me. And actually, I even put out images as we were sort of climbing the wall of worry that I actually think on balance, I think that we, again, this is Brian's opinion, certainly not financial advice, but, and of course, opinions are opinions, trade your damn setups. But if somebody asked me my opinion, I feel as though Mr. Gann is driving this bus. It's fascinating how this move from the top down to the bottom was almost exactly 1 year, right on the nose. And how this move to the 50% rule was almost exactly 50% of that year. And this is classic WD Gann. I mean, this is his bread and butter. In essence, bounces to the 50% rule usually occur about 50% of whatever the down or up move is. So absolutely classic textbook WD Gann. So with that in mind, and of course we went a little bit beyond, but notice how we are just basically parked right on the 50% rule right now. If this did continue very WD Gann-ish, then we should actually expect a 50% retracement of whatever this move was. Now, at this particular level, when I did 50%, came out to 71.82. With this new high here, printed here, if we do 50% off of this, you can see that that's now 8,500. And gee whiz, what a coincidence. You can see that the 13 EMA as sort of our support actually is going to bump up against that level. What I find really interesting, which sort of caught my attention, was we didn't really get much play at the 38.2 on the way up. Right, when I do 38.2s here, gee whiz, there's the 38.2. We might actually have to come back down, and this other 38.2 is 38.2 off of this up move. But I got a funny feeling we're going to have to play around with this 38.2 level here a bit. That's sort of my hunch. But, you know, if this did WD Gann, the way Gann would basically be looking at this is he would be saying, well, we should probably now retrace 50% of this up move if this is the top. And you can see right now that takes us back to about 8,500. I think, you know, if you're actually thinking where is support in this market, I actually think support is this last sort of weekly pivot low where, you know, a bunch of people probably said, okay, that's it. The rally's done. I'm going to sell. This creates a fractal top. You can see we also call this like an empire top. In fact, actually the level oneers, they just did this. Do we have any of the current level oneers here on the call? Tony, you're a level oneer, aren't you? So this is something that you should have learned here just this past week, this concept called the fractal. And should, you know, if this candle had gone through this low here, then that would have actually generated a sell signal. But you can see the market opened up. It sort of said, do I want to go down there? Nope, I want to go higher. So there's a whole bunch, of course, trap bears that all shorted in here. And they're sitting here going, oh, God, now what do we do? If we do get back down into those levels, I think that's going to give them the opportunity to get out. But I wouldn't be surprised if there's some play. Like, so if you're looking left and you're trying to figure out where support is, I think it's off of this most recent low here. And if we do things like reload zones, there's our buddy, Mr. Mountain Man. In fact, actually, we can even, why don't we put him right on here now? Where Mr. Mountain Man loves the 61.8 fib. You can see, I'll change this. Hold on a second. Reload zone. But did I do that backwards? What happened there? That was weird. Try that again. Reload zone. Hey, there we go. So here is 61.8 fib. And gee whiz, look who stopped this market. Doink. Just right on the head. In fact, we should probably change that to red. I swear, this guy, if you're going to learn one thing, holy moly, learn the power of Mountain Man. He's ridiculous because this guy stops freight trains in its tracks. So, you know, if this is the top and we roll over here, my hunch is there's Mountain Man sitting there right against that key low, and probably things like 30 SMA are going to work their way up into here. So, and also too, actually, Colleen, this is right down your alley. Remember we talked about this last week? The market was asked whether it was going to accept above value. And it did. This is basically the acceptance above value, and price just took off like a rocket, eh? See that? Isn't that such a cool example of accepting above value? And woohoo, here we go. And then notice on this move up here, where are the buyers? There's nobody even buying up here. It's so weird. Like you listen to like the Twitter audience, and if you listen to Twitter, everybody and their brother was piling into Bitcoin. And everybody and their brother was all, oh my God, you got to buy Bitcoin. But you look at the profile and you go, well, wait a minute. There's not that many buyers up here. The problem with the crypto Twitter, when they all go, man, they are already long from down here, right? That's the reason why they're all like, ah, you know. Anyway, so the point of the matter here is Mountain Man stopped the bull, and that does happen quite a bit. In actual fact, on the rally up here, I even conjectured, I was very curious, because there's 38.2, and I was kind of like, I'm really surprised that the market didn't actually run into some more traction at 38.2 and things like 50% rule. On the way up here, it just sort of blew right through these levels. And this actually bothers me a little bit for the bulls, because if it can't stall and sort of reload and find new levels, new horizontal support and resistance and that kind of stuff around those lower fibs, and it just shoots straight up into Mountain Man, then that does actually lay the groundwork for this actually being a massive harmonic formation. If you see a straight line move up right into 61.8, then we definitely have the potential for Mr. Gartley. Dun, dun, dun. And it's interesting with Gartley enthusiasts. They are like religious about this move. It has to come basically right into that 61.8. And then notice, let's see if I can show you. Oh, there we go. Notice that this pullback comes all the way back down to 88.6. So what does that mean? If this is a Gartley, and of course you never know until, we won't know that this is a Gartley until all of these levels are traded to, and then we rally up into here. Then we start seeing divergence, and that's it. Nice M, and then oh boy, get ready. But if this is Gartley, and we rallied into 61.8, and we just melt our way back down, there's 88.6, or what? And isn't that interesting? At 88.7 here, but there's 88.6, classic Gartley. Notice how that's basically just a check of the original breakout. And ironically enough, we've been expecting this whole sort of winter, and we have a big sort of TRI Vancouver 2019 meetup, right, for all our OGs. We got something like 20 or 30 people all coming and hanging out with Brian for a week in Vancouver. Man, we're going to tear this city apart. But I had suggested to all of them, use Litecoin as a vehicle to finance this. Why do I say that? Well, because Litecoin actually had a fundamental event that could justify this rally. It's happening. And we also know that Litecoin, I don't know whether any of you were even around the crypto space last cycle, but Litecoin actually was the subject of a Ponzi scheme out of China back into that last halvening, and they took Litecoin prices absolutely nuts. It was like it bottomed at like $1.50, and it ran up to like $30, $9. Beg your pardon, $9. I mean, we can always just go back and look on the chart here. Isn't that interesting? Litecoin's been on stamp forever, hasn't it? Let's maybe refresh this. Sure hope it doesn't blow up. I killed it, lost all my charts, all my levels. Oh, that weird. How long has Litecoin been on stamp? I thought it's been on stamp forever. Must be missing something here. Anyway, the point of the matter here is fundamentally, we had a reason for this thing to rally. It made sense. And then technically, hopefully everybody can see the little W that came in here. Nice moving average cross, right? Lots of justification for this thing moving up. AB equals CDs took us right into this particular reload short zone. And basically you can see that that's basically where the market stopped on a dime. And all we've done over the past few weeks on Litecoin is just consolidate. Now, just like I said with Bitcoin, there's 13 EMA. You can see how basically, and here, maybe we should get rid of this. You can see how price just basically worked its way right back down, almost kissing that. I'm not saying that, Litecoin's a buy. I'm not even, commenting on this right now. All I'm saying is this was a very beautiful AB equals CD. And you can see how quite often these like to resolve. In essence, this is the end of the move. And now we need to consolidate, ideally, for like bot traders and stuff like that. We'd like to see 3 higher lows develop here, but we're coming into that fundamental event window. And I actually have found in my own personal experience that these things usually like to top out about a month or so ahead of their happenings. So if we actually found out that Litecoin did top out here, or it's going to play around here and top out here ahead of that happening event, that wouldn't surprise me one bit. So I had suggested to people to use this Litecoin rally to finance your trip to Vancouver. I thought that would be a great idea. I sure hope people did that. I know a couple of site members did, and they were very thankful for that. Ooh, look at Ethereum. What the heck is going on here? I got a funny feeling my charts are a little screwy here. This might just be a function of my charts, not wow, yeah, what a mess. I'm not even getting anything on that Ethereum chart now. So where was I going with all of this? Hopefully everybody can see Bitcoin just did its AB equals CD. Now, you never know how the heck these things are going to play out, right? And I think it's really dangerous that anybody get into the business of calling tops or calling bottoms in the market. Extremely dangerous. You can have an opinion. I think the market's going here. I think the market's going there. But we have an expression in trading: strong opinions, loosely held. So you may have an opinion, right? I thought that the market was going to stall out at 38.2, and the market said to me, sorry, Brian, not likely. I don't necessarily get insulted or offended that the market didn't obey my projections. I just simply have to say, look, I was wrong. The market didn't stall out at 38.2. In fact, it worked its all the way up to Mountain Man. I've got a level on here. I'm very curious about 50% rules. I showed you those tweets of what ought to happen, but that doesn't necessarily mean it's going to happen. The market will do any old damn thing we want. And if you're going to trade this market, what do we trade? Can anybody on YouTube finish that sentence? If we're going to trade, do we trade people's opinions? Do we trade what people tell them to buy? Absolutely not. What do we trade? One word, starts with an S. It's actually kind of like 2 words. Thank you, Dav. Try and drill that home to all of your followers. You have to trade setups. You have to. And you just have you trade. That's not one word, Jonas. IKEA, those broiler chickens are looking like setups. Anyway, so the point of the matter here is, ironically enough, and we were touting about this forever. If you actually looked at Bitcoin, we had a big weekly bullish divergences. We had Willie stupidly oversold. We had W's that came into price. We were at a really long-term moving average. We were 1,000,000 miles away from the old high. 50% rules were substantial multiples off of this W. That's what I call a setup, right? You've got location. You can see the reload zone. In fact, we talked about this at length, how the market, gee whiz, what a coincidence, politely put in its double bottom right off this darn 78.6, or what I like to call the line in the sand. The bulls stepped up and defended this. And you know what's fascinating about all this? We even talk about this. Joey Diamond comes out through this and says Bitcoin's a fraud, right? Warren Buffett comes out and says, oh, it's cancer, right? And then his buddy goes, oh, it's rat poison. And now, gee whiz, as the market's actually rallying up here, we're now hearing that JP Morgan, Joey Diamond, likes Bitcoin now. And he loves cryptocurrencies. And now JP Morgan's in the business of cryptocurrencies. Hopefully, everybody got a really powerful lesson on how institutions think and act in the marketplace, because this is critical. You have to understand this. They are going to blatantly lie in your face to get you to do what they want you to do. They're not going to guarantee anything, but they'll go on like public talk shows, and they will say Bitcoin is a fraud. How can you legally hold them accountable for that? You can't. But in essence, all the people that were sitting, mom and pop, sitting, oh, well, if Joey Diamond, president and CEO of JP Morgan, says that Bitcoin's a fraud, well, then maybe I better not touch it. Meanwhile, they engineer this move, and guess who's loading up as the public is panic dumping? You have to understand this. This is the way capitalism works, and it sucks. It's like one of the main reasons why I'm doing these videos and I do these free shows for you guys is I'm trying to break that model, because I think the whole public just got royally taken to the cleaners. And it really, it depresses me, because now when we're up top here, all you hear about is how the institutions absolutely love Bitcoin now. And it turns out, the financial advisory boards, they're not crapping on the cryptocurrencies, they're crapping on the exchanges, because they know that's where the Achilles heel is. So go figure. Anyway, so, I just heard somebody say on YouTube, there is no way it goes back down to 4,200. Just the simple fact that you said that, Jack, actually leads me to believe that it will go down to 4,200. Don't mean to be rude, but this is the way capitalism works. If everybody says, no, that will not happen, then the odds are that probably will happen. I don't really know where the hell the damn price is going, but I said this before recently. I don't think it's in our best interest to actually be aggressively shorting Bitcoin here. I actually think there's a lot of effery going on here. This is what we call a V-top. And if this actually really is a top in the market, then we should have seen things like divergences. We should have seen things like the money flow. Notice at the top here, look at the beautiful M that came in on OBV. Look at the red bars, the accelerating selling. Look how Willie was really stupid up here. We're not seeing that yet. So I still, and somebody on the site the other day actually got pretty upset at me because they were thinking about selling up here. And I said, I don't think it's actually good to actually short. And they interpreted that as, oh, I guess I shouldn't be selling my Bitcoins. Never said that. If you bought off the bottom and you're not taking some profits up here, well, that's an issue that you have with you and your conscience. Maybe you're getting a little greedy. But I still don't know whether I'm totally comfortable with the idea of actually outright shorting Bitcoins yet. To sort of get a better idea of what I'm talking about there, we have this chart. I think I even produced these charts for Twitter. We actually had a whole bunch of bullish setups. We had like algo signals that were telling us to be long. We have, I used to run a setup that I affectionately called the bot, which highlights levels, to generate 3-to-1 risk-reward ratios for the traders of the community. And if you're going to trade, that means you have stop losses working and you limit your risk. Very different than little old ladies. But the point of the matter here is we had lots of sort of bullish setups that were projecting some pretty crazy ass numbers up top. There's that 50% level reference. And I even sort of conjectured, how is the market? We have to actually really listen to how the market's going to behave as we come into these big higher time frame levels. In this particular case, the market consolidated just below the 50% level. It came up, it like kissed the 50% level. But when you looked at the indicators, there was no signs of divergence. There was no structure. So it really didn't make sense to step in front of that train at that point. And sure enough, right, as we see, there is that 50% tag. It put in a little doji. It could have fractaled out here, totally possible, but it didn't. It just kept churning its way higher. Here is that so we're still fighting at the 50% roll, trying to figure out whether we want to top out. And it was interesting, on this dump candle, that gives me a higher low. If we actually break this high, well, then the algo people, they can start moving their stops up. So the market keeps working its way up into that insane blow off top. There is that low. No fractal. It was just a doji off the 50% rule. Then this pullback candle moved to new highs. Those that are long can start moving their stops up to higher lows. And now we get to move stop to trailing on the bot setup. So the botters, they can actually start locking in profits, but keep in mind their target's still way up top here. Market keeps working its way up. And doink, here we come. Good old Mountain Man. He's in the gun sights. Where are we here? All right. And so this is a really busy chart. But in essence, this is both of those long setups. There's the algo setup. It sells half of the position at 2-to-1, stop to scratch. And then as we make higher highs and higher lows, you get to move your stops up. I was telling you about how there's that level off of the 50% level. They can move their stop up. Then we made a new high. There is the bot level, 12,600. Turns out we did hit that. Botters, ding, 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 ring that register. Bit of a pullback, then move to new highs. On this move to new highs, algo traders can now start moving their stop up to this low, and then boom, right? Basically, this is the other side, and I think that on this event, algo traders should have been blasted. It's interesting, and actually, what's so weird about this is that I actually did up this chart and this commentary. I often see this happen. Market shoots past the bot target. In that case, it was an alt AB equals CD target that was ultimately hit, only to come back and play with that level from the other side. And the irony of it all is that this is exactly, it was like a carbon copy. It kind of felt like I was like literally doing like a deja vu. This is deja vu all over again. It was identical. And we might have continued working our way higher here. 3 higher lows. And the botters will start getting interested in getting back in on the long side. Long and short of it here, the botters actually exited here, and I love joking with people about this. Let's see who can answer this question the quickest. The pros are hopping off here. Who's buying up here? Do you think it's the pros? All right, Khalid, you're quick with those answers now too. I like that. That's good. Now, what's also really cool about this is you actually had a little hidden tell that this move, there was problems with this. Notice on your indicators, now keep in mind, this is an hourly price chart, right? These are the traders. Traders got to trade, rah, 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 right? The traders actually got a little heads up, and this is really cool. And Riza, I need for you to learn this because I see this happening over and over and over. Even my algo even created a divergence on that move to new highs. And when my algo isn't happy, there's no way in hell I can touch this damn thing. I gotta just leave it alone. So I thought that was really cool how the algonators got stopped out here. Keep in mind, their buy signal came in way down here. Monster win, like 7-to-1 risk reward on the second half of their position. They're gone now. Botters, they left on this initial rally up top here. So all of TRI sort of like, you know, traders got to trade. Rah, 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 rah. All those long setups, they're done. And what I find interesting through all this, and, you know, please, everybody, if you're trading this, you have to force yourself to take profits. You have to. You have no choice. Right? And one of our site members, he got pretty angry at me because I said I wasn't ready to short this thing. And you didn't know what the hell was going to happen through here. And he actually interpreted that as don't sell your Bitcoins yet. And that's extremely different. They're apples and oranges. So if you are trading and you're trading setups, for heaven's sakes, when we come up into these massive profit objectives, you got to force yourself to take profits. Okay, so moving right along, and the sort of zoomed in, I even tweeted out a zoomed in picture. There is that algonator stop, boom, done. You could have made the argument that, hey, you know what? There was a higher low here. Alginators could have had their stop at the bot exit level and been stopped out here. I think we're splitting hairs. Just to keep it simple, I'm more than happy if you had just walked here. But, just like we saw here, this basically created what we call a diamond pattern. And in this particular case, you can see that the diamond pattern, it stopped on its initial burst down and it started making higher lows and higher highs. And here we go again off on the bull run. That might have happened here. You don't know. Nobody knows. All right. Don't get into the business of predicting markets. Just trade your setups. So at this point, all the long setups, they're basically told to exit. We're creating a diamond here, extremely volatile. Remember that this was this big CME futures contract expiry. We know that there's big players that are taking positions here. So you might even want to just give this some time to let it breathe and let it develop a little bit before we start rocking and rolling. And as we saw over time, the diamond itself, did I do any more charts of the diamond? Nope, that's it. All right, so, and I think actually I've taken it off screen because it was a while ago. Here we are. So that diamond, this happens to be off the hourly. We'll put this back to 4 hour. So that diamond that I just talked about a moment ago, you can see that it was actually off of this initial dump right here. So you could actually make an argument that if we go back to that hourly chart, that this was the diamond here, right? There to there. And got the magnet on. There to there. And there to there. I mean, maybe even off of that low there. And there to there. Twinkle, twinkle, little star. And you might have even gone steeper like that. That's entirely up to you. But the point of the matter here is when this level is broken right here, it means that the bull is officially done. And now that the diamond has actually fired, now we have to start thinking correction. There is that mountain man level, right? And as the market failed off the diamond, it continued to work its way lower. And really, ultimately, what I found really interesting about this is actually that was the previous diamond right there. I think that really all they did was this move was bullshit. It was all about the CME contract expiry. And of course, listening to the public get insane bullish and, getting very emotional. Gee whiz. The emotions, even around the TRI site through this, were just palatable. You could literally feel people's tension. It was quite remarkable. And of course, everybody going, "Oh my God, I missed the boat. This is it. It's going to new highs. I missed my opportunity, Brian. How could you tell me to get out of these positions and square up and take profits and all that kind of stuff?" And then the market just fell apart, which sucks. I mean, it's just brutal, but it is the story of capitalism. What I thought was really cool about this, you want to check this out, was if you were actually watching this diamond really closely, and keep in mind, this mountain man level is a huge higher time frame level. Notice on this initial dump, notice if we draw a reload zone going back up to the old highs, look how this was basically a reload zone counter trend rally right into that higher time frame level. So my hunch, and it's interesting out because on the site we were even talking about this happened through the Asian kill zone. And we often call that the institutional session because it's where a lot of sort of the JP Morgans and the Merrill Lynches and stuff, they all sort of act through this session. The North American session's quiet. Everybody's done here in North America. They're positioning themselves going forward. And I thought it was really interesting how they just politely rallied the market right back up into that mountain man level. Look at that goddamn level there. And now if they strap on that short, then they have pretty well defined risk window there, risk to new highs, and we're going to gun for a 2-to-1. And you can see literally tag that level, rolled over, and doink right into their profit objectives. Just sick. And that's that, but that is extremely high octane trading. If you've worked with, hi Shane, what are you showing me? Are you trying to show us something? Are you trying to show us your screen? Yeah, Shane's in the hangout here and he's trying to there he is. What did you want to say something to us? No? Okay. All right. Anyway, he's in the hangout here, so he just turned his camera on and it caught my attention. But anyway, long and short of it here, wow, what a level. That's like, you often see me guys say, like a trader's trade, right? That is a trader's trade. Identify your higher time frame levels, then drill down to the lower time frames, hunt reload zones off of those levels, and it gives you a very defined risk window. I think I've told you guys that, running this website, running this school, I mean, gee whiz, I just had a class with 90 people in it. 90 people! This is nuts! Hit that like button, smash that subscribe button, ring that bell, all that stuff. I can't run a trading plan and trade off of those levels. I just can't. It's just too much for me. I tried in years gone by and I end up not sleeping. And if you're a trader, got trade, and I want to trade these levels and that kind of stuff, great. We've got one site commentator who does the daily brief with me regularly, Thomas De Beer. He often is like, oh, it's 3 o'clock in the morning. I'm still trading away here. Doesn't look like I'm getting much sleep tonight. I've tried to live that life with Bitcoin and I can't. And 9 times out of 10, if I trade a leverage position on something like OKCoin, 3 o'clock in the morning is when levels are hit, alarms go off, and it's just like, oh, well, there goes the rest of that day. I'm screwed. So anyway, the point of the matter here, I think there was a trader's trade that's set up here, and I think that's basically what's been dictating this market since that event right there. And you could also argue, too, that, if you missed this initial dump, that was your counter trend rally to try and lighten up. Market rolls over, 2-to-1 levels hit, Goldman Sachs they're happy, la, 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 la. And, off of these lower time frames, I don't know whether we actually had any divergences come in here, but it wouldn't surprise me if we actually started to get signs against these lows that maybe the market's done on the downside and we need to counter trend rally. And lo and behold, market starts its climbing the wall of worry, and there's good old Mountain Man again. Just nailed this thing. Doink. Stop right there. Again, pretty good idea to keep an eye on Mountain Man levels. And so we were sitting in the lounge even yesterday, sort of conjecturing, and it was really cool because I love this about our TRI lounge, is that we got a whole bunch of really cool educated market participants now. And it doesn't matter what time of day you come on the site because, Europe, Asia, North America, we're all sort of different time zones. The site is always hopping and there's different people posting levels. So, late last night, I happened to pop in to the lounge and people were chatting. Julian is in Thailand, for example, so that's sort of like the middle of his day, and he was posting levels and stuff. And I sort of conjectured with the group, maybe we have new bots setting up here. And so the bullish bot, and this gets a little bit complicated. It's going to be kind of tough for you to see this, but I'll take that off of there. The new bullish bot potential would have set up off of this 25 level looking for basically a test of the old highs. But at the same time, too, and this is what I really like about our site, is that we had some site members come on the site and go, well, Brian, I actually see both the bullish bot and the bearish bot setups here. And so I did up the bearish bot levels, and I was like, you know what? You're right. We could go either way here. And the interesting thing is that I'm so in love with my little algo now, and I think I showed you guys in previous videos. If I can get an algo signal that lines up with bot levels, I got to take that trade every day of the week. Got to take it every day of the week. And so you can see the algo fired bullishly here. So it's just really a question of, do we get structure that comes in to frame the trade? And gee whiz, we got this big fat bot here. And away you go. When I was looking at the chart last night, and again, I'm best served to operate off of these 4-hour charts. Like I said, I don't want to be woken up at 3 o'clock in the morning. 4-hour charts give you a little bit more flexibility. 2 bars is 8 hours, so I should be able to get a half decent night's sleep on 2 bars. But I looked at this, last night, and what I saw was down, up, down. All right, do I get 3 higher lows to work with to frame this bot long? And then I look down at my algo through that, and my algo is like, nah, not really that interested. So I, based on the fact that, yes, we had this lower time frame potential bot, but I didn't have algo confirmation, I just let this slide. Just like, I'm not going to touch it. It didn't even get to move stop to scratch, and then you can see it rolled over hard here. And had you taken that, this also too, do we actually have 3 higher lows? Keep in mind the long entry level is that W there. You got 1 low, 2 lows, the breakout comes. You could have justified that as a 3rd low and snuck in, but the long and short of it, big fat M comes in off of that same level, and we completely crap out. So had you taken this long bot, like I said, I didn't have indicator confirmation, so I couldn't touch this. But had you taken that, and I was very proud, there was one site member who said, well, I saw this bot and I'm just learning it, so I did take it. And he reported, I got stopped out this morning. And, seriously, Tony, there's no such thing as a bad trade. The only time that it's a bad trade is when you don't focus on process goals. So the fact that you identified this bot, it's, we talked about this on the site. I think it was a little bit aggressive, but nonetheless, the fact that you took it and you respected stops and you got stopped out, there is a ton of learning information in that. How did you feel? Did you actually act when you were supposed to act? Keep in mind, this is not little old lady trading. If you're trading the bot, you are not a little old lady. The point here is that on the fail of this level, you should have walked away and just said, I was wrong. In hindsight being 2020, if you had done that, I would actually give yourself a pat on the back. I tried this setup. I vetted it. I got stopped out. I followed the rules. I followed the process. I took appropriate risk. The trade turned out to be a loser, but there is lots of learning information. And like I said, Tony, I just keep working with us. And my hunch is we start incorporating indicator confirmation as sort of, rule number 2. You could argue that bot levels are trade location. Rule number 1. Did we get indicator confirmation here? I don't know. Did you have an RSI signal or a MACD or any of those kind of signals to support the idea? I don't know. We can talk about that later. And then finally, do you have price structure? And like I said, with the bot, I like to have 3 lows. We didn't really get 3 lows per se here. But nonetheless, the setup failed. Next bus in 10 minutes. All right. So interestingly enough, if we do the bearish scenario now, thinking A, B, C, D, there is the short entry level there. 1 high, 2 highs, 3 highs, And actually this is a kind of a cool example, because it actually affords you the opportunity to what I call front run the trade, where there is the bot short level. If you take this M and the fail of this trend line signal here, then actually you're in a little bit ahead of the bot. Again, is this a trade that I would take? No, because I don't have any algo, validation of the setup. But I could completely understand people if they were like, well, there's an M coming in. We lost this trend line. There are the bearish bot levels. I'm going to hop on this, and they are gunning for 10,658 here to get hit so they can move their stop to scratch. So this is still open-ended too. And then, as I said, Brian Swing Trader, I don't really have anything to work with here. I think I've got now one high. There is the bot short entry level. I've got two highs. If we actually come down and hit this 50% level, then I can't take the short. Because then that would mean that if we rally back to this 25 level, I got to hop off, right? Walk away at scratch. So if anything, I'm kind of rooting right now if I wanted to be short. You notice, you can see Mr. Short Algo is actually firing short signals here. So if I get any sort of kind of counter trend rally and a nice little rollover here, and the algo is still saying bear, then actually I can justify that short. We'll see how this goes. Only time will tell. And you see the A, B, C, D. Really what this is suggesting, if this thing does crap out, is we probably need to come back down to this 8,800, which I kind of like, because what I think needs to happen here is $10,000 is a big, fat, round number. You can see the 50% level is like 11,000. You see where short-term support was that key low we talked about a half hour, 45 minutes ago, which happens to be up against short-term moving averages, which, gee whiz, what a coincidence. This low here, for example, is 7,400. The 13 EMA right now, 7,900. So could we get a nice little pullback into this support area? Sure, wouldn't surprise me one bit. All right, so I think that basically talks about what I'm seeing on the old corn right now. She's looking heavy, and I think we did basically do a very important higher time frame level. And if this thing really gets going in earnest, I don't think it happens right away, but keep in the back of your mind Gartley, as Colleen points out, these notches on the profile. This happens to be Ethereum, but there's lots of unfinished business. In fact, actually, Colleen, you should look at this Ethereum chart, and one gentleman's name should jump out at you. You know where I'm going with this? And let's see if anybody on YouTube even knows this. All right. No, not thinking again. I'll give you a hint. That level. And that level. And then I'll even write that number. Let's look at all familiar, Colleen. Anyway, if this thing does get going in earnest and we accept back into value, then technically speaking, Mr. Hoagland would say that 80% of the time we got to go back and revisit value low. Boo, hiss, hiss, boo. If we look at Bitcoin off of that same sort of perspective, this is interesting because I think that value high here is going to represent support. And again, think that key low, think 13 EMA, think that a bearish AB equals CD, working off the lower time frames, that would bump price into here. If we then go and put in a big M or something and roll over and ultimately lose value high, then yeah, I think we've got some work to do to fill in these notches. But we'll see. Only time will tell. I think the most important thing out of all of this was the fact that we were looking for Litecoin to rally into its halving event. It did that. It's fascinating how, CNBC and services like that are actually now calling Bitcoin digital gold. That's like their sales pitch. I think that Joey Diamond has basically convinced the public, sort of the conservative class, older people, don't touch Bitcoin, it's rat poison. At the same time, they were loading up when they were telling people that they hated it. Now I'm hearing like CNBC now officially is calling this digital gold, and they've been given instructions by the bankers, the 1%. All right, time to shill it for the public, really ramp up, and get the public to buy up top here. And unfortunately, I think they're probably, they're a little late to the party. That's the way I would look at it. Okay, so hopefully that gives you a nice overview of what I'm seeing out of crypto. And of course, we also talked a little bit about the altcoin market. I'm not gonna sugarcoat this, guys. This is capitalism 101. I know a lot of you have come to the market, you're sort of first-time market participants, and you're like, well, I thought this was supposed to be easy. I thought, buying the latest shitcoin and I'll just make a ton of money. And it's one stop to Lambos. You got to understand that capitalism it's tough work. We don't always live in these kind of environments. Sometimes we have to live through these kind of environments. And if you are slowly accumulating, great, just keep accumulating. Find those good quality names. Right, Dav, you're in there on YouTube page. What's a good quality name project? I don't know if your community did well on that Grin, but Dav gave you a good fundamental story. Through our conversations, and I definitely know he told his community to wait for the W's, right, and be patient. And sure enough, that thing paid off big time. So concentrate on the good fundamental names. He's giving you, look at this, he's giving you 4. ETH, DAF, Grim, Grim, and Beam. Oh, Beam. Is there a Beamish coin? Is that what you're trying to tell me? I'm just kidding. So, when we go through markets like this, I actually like to consider this what we call like a coin pickers market, where if you can find good quality names and they've got a story, there is a lot of potential to make money. I mean, let's just show you that Grin. Is it on Trex? I mean, there was money to be made here. It's interesting how we've M'd out. We W'd, and in this particular case, we even had a W within a W. Oh, super sexy. There was money to be made here. Now we've just M'd out, which might mean, okay, well, party's over. Now this thing has to go sideways for a while. But you can't tell me there wasn't money to be made here. Just, find those trading plans, vet those setups, and rock and roll. Somebody and just, I guess, finish off that thought. I mean, please understand, everybody, I made reference earlier to that 17.5-year cycle. Believe it or not, I'm actually sort of moving towards sort of growth assets. I would actually like to try and find proxies in the stock market that can leverage Bitcoin and cryptocurrencies to increase their profit margins. I love that angle in the market. And, maybe I'm not banging out doubles on the altcoins because I'm very leery about the altcoin space right now. I showed you a couple charts. But there's lots of doubles to be had in the stock market. Overstock is an example, great example of, hunt those W's. They are, in a weird sort of way, a crypto proxy. And you could even argue that half of the reason why this thing pumped was because they were bringing crypto back to sort of the forefront of the conversation and then spinning off those assets. But even in the venture capital space within the penny stock market, this is a name where I did deals with this guy in years gone by on mining stocks. The last deal I did with this guy was a silver stock that he was running out of Mexico. the logic of our VCIM, venture cap investment model, for the stock market, it works beautifully. And this happened to be a crypto name that met that VCIM criteria. And I can tell you right now, I got a big whack of free stock on this name right now. That was just as it was breaking out, and I was sort of teasing the public. Volume speaks what? I mean, look at that volume. And it turns out, yeah, they came in and they did a really big deal, raised a bunch of money, blah, 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 blah. Long and short of it here, we were long from like 6 cents a share because that's where all the directors were long. I think I did later tweets showing you that I, basically have free positions now in this stock. Oh, that's the overstock. I got free position in that one now. Where's that little IWM? Did I not tweet it out? Isn't that weird? All right. Well, anyway, I can just show you right here. IWIM. No, that's not it. IMIN. There we are. Well, proof of the pudding is in the eating. It's that simple. So, everything that I did with that $500 into hundreds of thousands of dollars in the altcoin market over the past few years, I'm now shifting my attention back to the stock market, and I'm doing this basically exact same thing in the stock market now. And of course, I wouldn't suggest anybody here go and buy this now. You're too late. This is like a triple off of the bottom. So, okay, so just to finish off this conversation with you guys today, somebody did come on right at the beginning and asked me to look at a particular coin. I'm just going to give you my straight thoughts. I have no idea what the hell this thing's going to do. Don't even know the fundamental story. Please do your own due diligence, right? DD. Obviously, I'm not giving financial advice. I'm just simply telling you whether I would buy or whether I would sell and what are the levels I might be interested in. So we'll look at it first versus Bitcoin. I guess Bitfinex, Binance. I'm not quite sure where the best place. Let's go over to Binance. BitTorrent. Not bad. Actually, I think you're heading in a half decent direction, whoever asked me this. I do find it interesting that this is actually one of the few, and I don't know whether this was the ICO or whether this was a Binance listing or how it goes. But we often say that these candle body lows represent really good trade location. So you can see how the market came right down against those lows and basically put in the cutest little W here. Like probably if we zoom in, I don't know whether this did a W or not. Oh, no, it was a V bottom. But in essence, it just tested that candle body low. You don't even see it there. I don't mind this. If anything, this is a good analogy of, candle bodies versus the entire candles. I don't really mind if somebody had come to me and said, well, gee whiz, Brian, it looks like there's a channel here where if I buy the breakout above the channel this day right here, and I just simply risk to a break of the candle body lows, then, I've defined my risk. Little old ladies, I don't know, here's a really good example. What's the fundamental story? I don't know. But if you like the fundamental story and you like the developers, you like the community, you think they've got a half decent shot, whatever, yada, yada, yada. If you want to go in here, reload zones kind of idea, start a purchasing program. I really don't have a problem if you had told me that, Brian, I've initiated a little old lady nanny nibbles strategy on this name, and I'm going to accumulate very slowly over time. Stupid thing's fighting with me, right? That's not a bad place to sort of start your nibble strategy. It might have to work its way lower, and that's why nibbles are nibbles. They're not bet the farm. They're nibbles. But I kind of like this turn right here. And also, too, notice, our overbought, oversold indicators are pretty washed out here. That's a good sign. Our raw momentum reading is coiling up nicely and even broke out, gave you a nice little W right on that event right there. Market put in an M, so traders, of course, see the M and go, okay, maybe I ought to cool my jets. Works its way right back down. And what I like to see here is as the market's making lower lows, notice MACD indicator is not making lower lows. That's interesting. And notice just off of this action right here, our momentum indicator is actually starting to break out. I don't know how today finishes. You never know in this crazy thing. This thing might just totally crap out. But if we can finish the day here and this actually prints a bullish momentum divergence, that's a pretty positive sign. As we said with, fibs just off of this range, we technically do have trade location for you to be interested in. We've got now signs of divergence. We've got the market stupidly oversold and actually starting to put in W's. And we got the man here himself. When he was going through the education program, he identified that if I see a W in price momentum oscillators, and I see a W in volume momentum oscillators, we actually affectionately gave that a name. Who can on YouTube, who can tell me what name we give that setup? And Mr. Pandora's Wallet, you're not allowed to answer that question. Nobody? 150 people over there on YouTube and nobody can answer that question? Oh my goodness. Devil. I didn't say that. Sword. Yeah, cheater. Yeah, we like to call it the devil. So, I mean, what's really cool is actually that's not a bad looking little railroad tracks right there. And actually, do we have any level oneers here on the call? I think they all left, But they just learned about candle patterns today. So that's not a bad example of railroad tracks. Market went down hard here against these lows, opened up basically the same level, came right back up, and then went, okay, do I want to go lower? No, I want to go higher. And then, of course, like I said, I mean, you never know. The day is still young. I might finish this video and somebody hits the bid, bang, 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 knocks it right back down. I mean, that could totally happen. But the point of the matter here is we're starting to get some really interesting bullish anecdotal evidence here. So it's not a bad name, to be perfectly honest with you. Now, if you are, little old lady, nanny nibble, we often see that markets do pivot off of 78.6. So that's pretty normal. We have one site member who absolutely loves the 88.6 as trade location. So, I mean, I can understand that. There is 88.6, sick level. And we affectionately call that the Leprechavark. But actually, that's not such a terrible idea, to be perfectly honest with you. I think, however, if we do lose these lows, number one, I mean, look at it this way. Keep in mind, this is crypto, right? So these guys can mess around with these markets all they want. But there you can see the cute little W that's trying to come in. Could you play that W and just say, look at, if we close back below here, I'll get out? Sure. I think if it was me and I was trading this, I'd like to try, if I could, and sneak in somewhere close to these lows if that's possible, and risk this tail. But, I mean, you can see what number of sats we're talking about. That's 6 sats and that's 10 sats. So, I mean, how low can you go here, right? Where my hunch is like this would be perfect nanny nibble little old lady, because where the floor is. It's 0, right? So if you just were accumulating this thing down at the bottom, and if it goes to 0 and goes off the board, well, so be it. If you wanted to take a trade, I don't mind, buying there at 12 if it closes here, that is, and risking to like 8. It's about, what is that? That's about 30%. Maybe see if you could sneak in at like 11 and risk to 8. So then that way that's 3 on 11. Starting to get that risk down to like 20, 25%. That's ideally what you'd like risk to be in. And then, of course, if the idea works, rock and roll. My hunch is we might set up what we call a LJ on the site. And if that's the case, then we actually expect this level to be tested one more time, 3 tests of the trend line. So my hunch is she's probably going to, if this does hold these lows, probably going to rally up into this area, then come back down. We'll see whether it can actually break out through here, and then W on the other side of the trend line actually represents your big momentum signal. So I think right now you're just sort of fishing against the low end of the range. You've got the divergences that are trying to come in. You got a bit of structure. We're at the bottom end of the range. This almost in a way is like kind of like catching a falling knife. You've probably heard that expression before. We're not showing any signs that the market's actually trending higher, but it isn't a bad place to take a shot. Of course, this is all within the context of your trading plan. You have to identify clearly what type of risk taker you are. If you are a little old lady, you're just nibbling away here, and this thing might even make new lows. And you want to nibble a little bit more. You stop the nibbling, absolute hardcore stop at 5% of whatever your stake is that you're working with within this crypto space. And remember that stake that you're working with is part of a bigger picture financial plan. I don't want to hear about anybody who's like 50, 60 years old. Their net worth is 100 grand and they're throwing like 80 grand into crypto. I mean, it's just immature, and you're just asking for trouble. Okay, I think I'm going to leave the rant at that for today. I've been blabbing away. I didn't know what I was going to talk about today, but it turns out here we are about 2 hours later. I don't know how the heck I'm so long-winded. I certainly don't do this intentionally, but I just talk until I feel like I've said my piece. So I think I'm going to leave it at that for today. We'll be working on the disclaimer to make sure that we say specifically every single time we do these videos, this is not financial advice. I'm just simply telling you what I would do with my money. What you do with your money is entirely up to you and your trading plan. If you need help building plans and doing things like what is an appropriate risk taker, what kind of risk taker am I, where does crypto fall into my overall plan, I highly encourage you to take our education program. Have found consistently that the education program is about a year in duration, and those people that do the course from start to finish, almost every single one of them on the other side of the program either becomes part of TRI's education crew or have gone off and started their own services on the net and have become very successful. But they are educated, wise market participants. So the education program works. It's worth the investment, but it is an investment. Don't get me wrong. I used to like to do this for free, but we have a whole team at TRI. Salaries have to be paid. Babies have to be fed. So we do have to charge a bit of money, and it's for a full year. So it's not like this is some, thing that you're getting shilled for just like one simple product. I mean, we work with people for a full year. So highly encourage you to consider the education program if you need help. As well, the boys would like me to suggest that actually on the YouTube page now, we do have little 10-minute market summaries that we do on a daily basis. So check those out for some just quick overview of what we're seeing in the market and what we've taken away from the daily brief. You should be able to find them on our channel. Let's see if I can do that. Somewhere around here. Not quite sure how to do this. Where is the channel? Channel. Where are you, channel? There it is, your channel. So we've just got this going. We've been doing a whole bunch of dry runs to try and figure it out in time-wise. And they're good, 10 minutes or so. I think that that's sort of the ideal window that we're shooting for. So keep an eye out for those. Great little pieces. But again, remember, everybody, this is not financial advice. This is simply what is Brian doing with his money. If you decide to participate, great, but you have to be working off of your trading plan. These are cute little sort of, you can see how many people watched. It looks like we're getting a bit of traction here. There's sort of cute little sort of summaries of what we do through the week. As well, too, we do have a free 7-day trial. You can come on the site, but actually there was one gentleman who used to work with me at an old prop firm that I used to trade with, and he kind of took advantage of us. And after his 7-day trials came up, he was like trying to figure out ways to try and get new trials. And he was being a little bit flip about how he was able to sneak around barriers and able to get more free trials. And it turns out that we woke up one morning and his IP address was banned and, basically blocked from the site. So don't be insulted if you try and take advantage of these guys. Remember, the guys who are running this website, these guys are smart people. Good old Stuart. I mean, this guy he's a living computer. And don't try and out-computer these guys. It's not worth your effort. It's because they always win. Right, Stuart? So you are more than welcome to come. Internal server error. You are more than welcome to come and take advantage of the 7-day free trial. We encourage everybody to do that, but you need to understand that if you start messing around and these guys, it is a 7-day free trial because it's 7 days. So we'd love to have you on the site. We'd love to have you in the into the daily briefs and part of the lounge conversation and get to know sort of the community. I think it's a great way to learn whether TRI is a good fit for you. And feel free to come on in and introduce yourself. I have seen a few people that have done the 7-day trials. They've actually said, okay, when's the next school term start up? I want to sign up. Please understand that we do quarterly intakes. So the next terms will be in September. So if you do actually sign up for the school now, we give you the summer for free while you're waiting for the school to start. So consider that. I think we do. If not, then I may have just put myself into my neck into the news. But I think if I'm not mistaken, if you do decide to join the school in the following term, you get site membership, basically complimentary on us until that time. Okay, so I think we'll leave it at that today. Hopefully that didn't sound too shilly. No doubt about it, we build some absolutely awesome traders at TRI. I think people get really good value for their money spent. It's good investment in yourself. I enjoy doing what I do, and you can see I'm blabbing on here, blah, 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 blah. But this is my passion. I love doing this, and I'll keep doing this for as long as you guys still think this is of any value to you. So hit that like button, hit that subscribe button, ring that bell. That's sort of the way that we know that you like this product and you want to see more of it. Feel free to take advantage of our 7-day trial just to get to know the community on the inside. Be sure to check out our little quick daily update videos that sort of summarize everything that we see in about 10 minutes. And give us all the feedback that you possibly can so that we can make this as best of an experience for you as possible. All right, I think I'm done. Have yourselves a great day, everybody. All the best. And the only thing left for good old Brian to say at this point is bye for now.